We are awaiting fresh comments from President Trump as he heads to West Virginia. We're going to bring you those comments as soon as we have them. But first, Apple, big-time drag on the market today, particularly the Dow after a disappointing earnings report that not only failed to inspire investors, but left a lot of criticism as people have really are negative reactions. A lot of Wall Street firms are downgrading this, and in part because Apple says they're going to stop reporting on individual unit sales. What are they hiding? Lou Basenese is with me again, founder and chief analyst for Disruptive Tech Research. Lou, we brought you back because you were extremely excited. In fact, you were, quote, a fanboy of Apple. Are you still a fan?
Listen, yesterday I was a fanboy. Today I get to be your punching bag because I was probably a little bit too optimistic. But honestly, the two things that we said to focus on yesterday, holiday guidance, which came up a little light, and then the average selling prices. But if you get below the headlines, you realize the holiday guidance was weak, not because of consumer spending trends here domestically. It was really in foreign markets. So the bigger trend that we talked about yesterday that was impacting Amazon, but we didn't think it was an indictment against the U.S. consumer, is well intact, which is evidenced by today's jobs report and the wage growth. Moving on to the average selling price, which I think is the most important, it hit that stretch goal, almost hit that stretch goal of $800 per device.
Let me jump in so the audience can walk us. We're walking through this, right? You brought up a couple things. The average selling price was up 28% year over year. It was remarkable, absolutely remarkable. Street was looking for $751. To your point, almost $800, but it appears to be coming at expense of slower top-line growth. And that's a yellow, if not red flag for a lot of people. It feels like, yeah, you can raise the prices on your cult, but you're not growing your business.
I would say, yeah, I would agree with you on that. They missed by 1.5 million iPhones. But the key, what they're trying to get us to focus on is what's the lifetime value of a customer, that services business. So if I get a device, I'm spending on accessories like AirPods, iTunes, Apple Music. There's going to be more money coming in, just not from that initial purchase. And that's the real strong point. The services business was up 27% to $10 billion in the quarter. Just to give you some perspective, that's a Facebook business. I mean, that's $40 billion a year. That's Facebook within Apple, Lou, so it's a huge business.
During the call, so I'm on the call, and I'm watching this stock in the aftermarket. It opens down $10, $11, rallies back only down $5. Looks like, okay, it's gonna be okay. And then the CFO says we're no longer going to break out unit sales, and the stock crashed after that. Are they hiding something? People are concerned about this. Why are they doing this?
Yeah, bonehead move. Are they hiding something? Absolutely not. I mean, this is the most valuable company in the world with the most eyes watching every jot and tittle in what they do. If they tried to hide something, it'd be sniffed out right away. What I think they're trying to do is refocus our attention on the value of those customers, the services segment. However, I don't agree by being less transparent. You can change the messaging and get us to look at the new value of the business by providing more information, which they're going to do in terms of the services segment, but they're taking away information from us, which is never well received on Wall Street.
We don't have a lot of time, Lou, just maybe 20 seconds. A lot of downgrades, a lot of readjustments of targets. I think Piper Jaffray defended them. You still like it? Where do you see the stock going from here?
Still like it. Apple's transcendent. They're going to overcome this short-term noise. It's very relatively valued, cheaply valued at 17.5 times earning if you strip out cash.
Where do you think it goes from here over the next year?
In the next year, I think we break out to new highs. I mean, we're talking about getting back above 230. So I think it's a low-risk, good upside return for investors.
Lou, thanks for coming back to talk about this. Appreciate it.
Appreciate it, Charles. Thank you.
Well, that's the 4,000-strong migrant.